It has 11 aircraft carriers. No other nation has more than two. It has 750 military bases in 80 countries. It spends more on its military than the next 10 nations combined. And yet, in 2026, this empire, with its stealth jets, its nuclear arsenal, its hypersonic ambitions, is quietly losing a war. Not to China, not to Russia, not to any army on any map. In fiscal year 2026, the United States government will spend $1 trillion, $1,000 billion, on net interest payments alone. For the first time in history, that number has surpassed the entire national defense budget. The most powerful military machine ever assembled is now being outspent by a math formula. This is the story of how the world's only superpower built a trap and then walked straight into it. To understand how America trapped itself, you have to go back to the pandemic. March 2020. The Federal Reserve did what central banks do in a crisis. They dropped interest rates to essentially zero. And then the US government borrowed massively, cheaply, recklessly. Gross national debt stood at less than $6 trillion in the year 2000. By mid-2025, it had surged past $37 trillion, a 520% increase in 25 years. But here's the critical detail. Most of this pandemic borrowing was done with short-term debt, Treasury bills, notes that mature in months, not decades. Think of it like this. Imagine you maxed out a credit card during a sale because the interest rate was 0%. Smart move, cheap money, you'll deal with it later. But the fine print says your card resets every 12 months, and when it resets, whatever the new interest rate is, that's what you pay. On everything you owe. That is precisely what happened. Between 2022 and 2023, the Federal Reserve raised interest rates at the fastest pace in 40 years, from near zero to 5.25%. And as those short-term Treasury bonds matured, one by one, in enormous waves, the US government had to refinance them, borrow again, at the new brutal rate.
Your money supply.
By the end of 2025, $9.2 trillion in US Treasury debt, roughly one-third of the entire national debt, had to be refinanced in a single year. And a further $9 trillion was scheduled to mature in 2026. The US government was not just rolling over old debt, it was rolling a boulder uphill in a higher gravity environment that it had created for itself. Interest payments reached $375 billion in 2019. By 2023, that had jumped to $659 billion. By 2024, $882 billion. By 2025, $970 billion. And in 2026, the Congressional Budget Office projects the number breaks through the $1 trillion ceiling. For the first time in American history. A 2.5 times increase in 5 years, not because they borrowed more, but because the price of the debt they already had just went up. And this is the trap, the ignition point. The moment a debt problem becomes a death spiral. Now, here is where the story takes a turn that most financial analysts refuse to acknowledge publicly. Because the interest rate trap doesn't exist in isolation. It has an accelerant. And that accelerant is the slow, quiet, geopolitical rejection of the US dollar itself. For 80 years, the US dollar has been the world's reserve currency. Every country needed dollars to buy oil, to settle international debts, to do business, which meant they all bought American Treasury bonds, which meant America could borrow cheaply from the entire planet. It was the greatest financial privilege in human history, and it is now eroding. The dollar's share of global foreign exchange reserves has declined from 71% in 1999 to approximately 57% today, its lowest level since 1994. Now that may sound like a small number, so let me put it differently. Imagine you own the only restaurant in town. You set the prices, you control the supply, everyone has to eat at your table, and then a second restaurant opens, then a third. You still have the most customers, but you no longer have all of them, and you never will again. Saudi Arabia chose not to formally renew the petrodollar agreement in June 2024. That agreement, signed in 1974, was the foundation of dollar dominance for half a century. Under it, Saudi Arabia priced all oil sales in dollars. In return, America provided military protection. It was a deal that forced the entire world to hold dollars, and now it is gone. China held $1,350 billion in U.S. Treasury bonds in 2013. By April 2025, that had fallen to $757 billion, a 44% reduction. Foreign investors' share of the U.S. Treasury market has fallen to 30%, down from a peak above 50% during the 2008 financial crisis. The world is not panicking out of U.S. debt. It is walking away, calmly, methodically, one bond auction at a time. And here is the death spiral mechanic, the thing that makes this truly terrifying. Follow this logic carefully. When fewer foreign nations buy your debt, you must make it more attractive, which means higher interest rates, which means your interest bill grows, which means your deficit grows, which means you must issue even more debt, which means you need even more buyers, which means you need even higher rates. This is not theory. The CBO projects net interest payments will rise from $1 trillion in 2026 to $2.1 trillion by 2036. That's $16.2 trillion in interest payments over the next decade alone. The spiral tightens, not because anyone made a mistake this week, but because of decisions made decades ago, and the mathematics of compound interest, working silently in the background. Like a clock, nobody could hear, until now. Here is the paradox. The United States military exists to project power, but power costs money, and the money is being eaten, silently, structurally, mathematically, by the very debt that funded past power projection. In just the first quarter of fiscal 2026, October through December 2025, net interest payments totaled $270.3 billion. That is more than the entire interest spending for all of fiscal year 2017. In 3 months. The US spent more on debt servicing than an entire year's interest from just 9 years ago. Net interest payments now represent 14.8% of all federal spending and 22.1% of all federal tax revenue collected. Put that in concrete terms. For every dollar Americans pay in federal taxes, 22 cents goes directly to paying off interest, not to building weapons, not to paying soldiers, not to maintaining aircraft carriers, to interest, to the bankers, to the bondholders, to foreign central banks. And here is where the paradox becomes physically dangerous. The US hypersonics R&D budget for fiscal 2026 came in at $3.9 billion, down $3 billion from the prior year. Meanwhile, Russia and China already have operational hypersonic glide vehicles, systems that can evade every existing US missile defense. The gap is not theoretical. It is closing. Right now, this is the cost. Not measured in battle debts, not announced in press conferences. It is measured in the slow, incremental erosion of technological edge. Every dollar paid to a bondholder in Beijing or a hedge fund in New York is a dollar that did not go into the AI targeting system that might make the difference in the next theater of war. By 2036, net interest outlays are projected to reach $2.1 trillion. Defense spending is projected at $1.1 trillion. The gap between what America pays its creditors versus what it spends on its military will have doubled. In a decade, the empire that spent the 20th century projecting power is spending the 21st century servicing its past. History is full of empires that believed their power was permanent. Rome did not fall because a stronger army defeated it at the gates. It fell because the cost of maintaining its legions, its borders, its infrastructure, exceeded what its treasury could sustain. The soldiers were still there. The roads were still there. But the money to pay for them was not. Empires do not announce their decline. They don't surrender at a ceremony. They bleed slowly, invisibly, through interest payments, through bond auctions where the buyers arrive but demand more yield for the privilege of lending, through budgets where the math of the past consumes the ambitions of the future. The United States is not helpless. It still has tools. It still has options. But every day that passes without addressing the structural imbalance between what it earns and what it owes, the options narrow, the tools rust, and the math, patient, indifferent, relentless, continues its work. The question is not whether the United States military is powerful. It is. The question is for how long and at what price that power can be sustained. When the bill for yesterday's strength is consuming the budget for tomorrow's, compound interest did not fire a single bullet. It did not launch a single missile, but it is winning. Quietly, mathematically, the way all the most dangerous battles are won, before anyone realizes a war was being fought. If you want to understand the financial forces shaping the world, the mechanisms that move beneath the surface of every headline, subscribe, because the real story is never the loudest one in the room. It's always the quietest.